Renu Pugalia is now joining us to talk about the capital goods space. One after the other. There are two spaces which stood out, Renu. One was the entire FMCG space. Everybody was giving very strong commentary and the stocks were running 8-10%. The next sector which came close on performance and commentary was capital goods. So, Anisha and I just thought of having this conversation with you. The name Renu Pugalia comes the moment we are talking about cap goods. But out of all these four stocks, the big ones, the big four, I would say, where did you find, where are you finding, comfort in valuations? I mean, they become sideways, they come mainstream, but valuations rarely come in a juicy zone. How are you negotiating with that?
Hi, good afternoon. I think valuations across cap goods, especially in the cyclical upturn and in this environment where everybody is reporting a strong beat on numbers, especially pure play capital goods equipment companies. Valuation has been a struggle, and that's not new. It happens every cycle that we have seen. I think it's only where, on a relative scale, if we see Larsen, which is disappointed on earnings, and where the relative outlook in terms of margins was soft. That was the only name where I think on a relative scale valuations looks better off. But if we look from an earnings perspective, whether it was ABB, Siemens, ABB saw almost 10% upgrade in earnings, Siemens saw 15 to 20% upgrade in earnings, and the commentaries were very strong, not just in earnings, but in terms of long-term drivers of growth, be it coming from domestic manufacturing capex or export-led mandates coming in terms of Indian capacity expansions. So I think there is a fundamental shift in how some of the parent groups are looking at the MNC subsidiaries in India. And there is a visible expansion in the portfolio and capabilities, because of which the valuation of these names have remained expensive. And in the current environment, they continue to be expensive. So I think valuation is a pretty tough rope to walk here for investors. The best strategy probably is just to stay invested and hold on to these names, wait for opportunities for dips to add more.
Hi Renu, Anisha this side. So the best strategy is perhaps to hold and wait for those dips if they ever appear. But we have seen in these up cycles, there are times that these stocks just continue to trade high, even above the 100 multiple, etc. But Renu, anything in the second tier or the second order companies where you're seeing still a bit of valuation comfort, whether it's Cummins, the Transformers, Rectifiers of the world, or any other such names where you would still say that the fundamentals are strong and the valuations haven't run up that much?
I think it's very difficult to find today average sector valuations today, and we don't look at just FY25, largely 2-year forward multiples in terms of visibility and valuation multiple. So I think average sector today is trading anywhere between 35 to 40p 2-year forward, and against that backdrop, clearly, I think finding value within capital good names, especially with companies with good governance, management quality, has been a struggle. So to that extent, I don't see any deep value names, but probably some of the government-owned companies, say Bharat Electronics, on a relative scale, given the kind of earnings growth momentum and visibility that they have, they definitely look much more attractive on valuations, trading at sub 30 times 1 year forward.
Okay, point taken. But let me specifically talk about Siemens because that's in news today on account of that demerger as well. What do you make of it? Because the earlier company tried to sell it, that was shot down by the minority. This time around, do you think this is a more of a win-win solution?
Yeah, I think Siemens energy demerger was expected. There were announcements to this regard earlier last year. And more importantly, the last transaction which the Indian entity had proposed for LV Motors, there was a given valuation which minority holders turned down. In this case, the valuations are open. It's more of an open market discovery. It's a vertical demerger followed by listing. So to that extent, it is very fair for both minority and other shareholders also of the Siemens company in terms of open to them in terms of realizing the value and the potential of the earnings visibility that we see in this name. And today, given the outlook that is there for the global grid equipment market, not just India, but even developed countries and overseas, I think the portfolio looks extremely attractive with new capex across business segments, including new technology products like Blue GIS and other solutions. So I think to that extent, Siemens Energy looks an attractive bet. And until
Right.
demerger and listing date, we may continue to see Siemens Limited, the listed company, trading at slightly more rich valuations
Okay.
till the record date approaches.
Okay, so we'll probably see that adjustment happening at some point of time. But Renu, were you disappointed to see the market reaction to L&T's earnings and guidance? I mean, yes, margin was a bit soft, but look at that order inflow visibility.
Yes, I think to that extent, if you look in terms of order book growth and the guidance, both were very strong. So technically, stocks should have reacted positively. But at the end, we also look at the earnings growth outlook. And that is where, because of a flat margin outlook for fiscal 25, we actually saw 5 to 9% downgrade in the core earnings. So somewhere the adjustment with respect to the market reaction was more in terms of the earnings profile and growth expectation of the stock. So we think L&T can surprise positively on the margins. They're trying to take a more conservative stance at this point in time. But until we see that earnings and margin momentum coming through, stock will take some time to get re-rated.
Thanks, Renu, for joining us today with.
If you like this video, then like, share and subscribe to ET Now.